Are you looking to put some extra cash in your pocket each month? Hey gang, it's Caleb, the Mortgage Man McDermott, and today I'm going to walk you through everything you'll need to know about the FHA Streamline Refinance. So if you have a mortgage backed by the Federal Housing Administration or the FHA, and you're considering lowering your interest rate or changing your loan term, the FHA Streamline Refinance might be the perfect choice for you. So let's start by understanding how the FHA Streamline Refinance actually works. And the primary purpose of this is to simplify the underwriting process for the lender and to reduce the amount of documentation that the borrower is going to need to bring in order to refinance their mortgage. However, it's important to note that this streamlined process doesn't mean it's entirely free of those requirements. And there are two kinds of FHA Streamline refinances. There's credit qualifying and non-credit qualifying. In a credit qualifying Streamline refinance, the lender runs a credit check and the borrower must provide documentation on their income and credit. And this is usually required when you're removing a borrower's name from your mortgage. And in a non-credit qualifying Streamline refinance, no credit check is performed. However, opting for this option typically results in a smaller discount on the borrower's interest rate. So regardless of the type of Streamline refinance you choose, the lender still needs to confirm that the borrower is current on their mortgage and complies with the other payment history requirements from the FHA. Lenders may also request borrowers to meet additional requirements and income requirements beyond what the FHA mandates. So now, let's talk about the requirements for eligibility in an FHA Streamline refinance. This refinance needs to result in a net tangible benefit to the borrower, which means your interest rate or loan term must be reduced by a certain level. And that's going to vary depending on whether your existing mortgage has a fixed or adjustable rate interest rate. Additionally, you must have made at least 6 monthly payments on your existing loan, and it must have been at least 6 months from the due date of your first payment. And at least 210 days must have passed since the closing date. And one last thing, no more than one 30-day late payment is allowed in the previous 6 months. So what about the cost involved in an FHA Streamline refinance, you may ask? Well, on average, refinancing costs around $5,000 according to Fannie Mac. However, the actual cost can vary depending on your loan amount and location. The significant savings comes from the fact that you don't need a new appraisal. Usually, a home appraisal can cost anywhere between, say, like $450 and $700. And since FHA Streamline Refinance doesn't require it, you'll save money in that regard. But keep in mind, you still have to pay for an upfront mortgage insurance premium and continue paying an annual mortgage insurance premium. While the streamlined process is attractive, it's not suitable for everyone. If you're looking to pull equity out of your home through a cash-out refinance, the FHA Streamline Refinance won't be the right choice for you. This process only allows to cash out a maximum of $500. For a larger cash-out amount, you should explore some alternative options like an FHA cash-out. To sum it up, if you've been thinking about refinancing your FHA loan, this should help you navigate the FHA Streamline process more confidently. And if you have any more questions, feel free to reach out to me or drop a comment below and I'll gladly get back to you as soon as I can. And lastly, if you found this video helpful, can you guys do me a favor and smash that like button and make sure to hit that subscribe button as well so you don't miss out on any of these informational videos that I upload twice a week. As always, I'm Caleb, the Mortgage Man McDermott, and I'll see you guys in the next video.